So now we are on a recording, and now you know how to become a good business person, right? So what you need to know, what you need to do, you need to learn the financial uh, analysis, how to do the financial analysis for different investment, and then you need to convince some saver with a lot of investment in the society, and you can turn his investment into a profit and give him a share as well keep by yourself. So let me share you the screen. So you know about the economic unit. Now you know about the economic unit. Um, what's the surplus? You already know. Where's the deficit? You already know. Promise of the higher returns. I told you, greed is never-ending desire for two resources: money. Yeah, one more thing. You can what greed is never ending for what? For at least two resources. That is money or respect. Maybe for food you are not greedy. For clothes you're not that greedy, right? If you have like 10 clothes, that's enough. But for money you always want more, and for respect you always want more. And these two things you can get through one prime resource, and that's knowledge. And that's yeah, somebody told me to write carefully, so I'm going to write carefully now. Knowledge. All right, so these two resources you can get knowledge. That's why you are investing in knowledge. You are investing your time, you're investing your money. Both can be achieved if you have knowledge. Now you know traits of a good business person. What's the main theme? To convert the investment, to turn the investment, to turn the saving first into an investment, and then to turn investment into the profit. So providing returns on investment in which can turn savers into investors. Private financial institutions sometimes in this race borrow a lot of money, right? And that made them, how do they borrow? Through debt security, we already talked about, and through stock security, they borrow money. So it can hold true for individual as well as business firms and financial firms, and at government level as well, because government also borrow money whenever they are in the deficit. Remember, deficit. So you borrow money if you are in deficit. You invest money if you are in surplus. So in surplus, invest; deficit, borrow to meet the expenditure. Exchange of debt security and stock security make your will enhance your borrowing capacity. I told you what is security. Security means like a secure promise that I will give you this much money back with this much percentage of returns. So how this money will be transferred from one group of people to another group of people? Let's see through a diagram. So there can be two kinds of transfers. One, direct transfer, then indirect transfer. Indirect transfer can further be divided into two kinds of transfer. So what is the direct transfers? I don't need anything. I'm a saver. I have money. I give money to any business firm or government. Right? And instead, I buy their securities. So I give my money, I get the securities from the business firm. That's how I'm gonna transfer my money. I'm gonna lend my money, and I can be investor from a saver. Now that business firm will uh, expand their businesses and earn more profits and give it to me. What is the indirect transfer? Indirect transfer is through investment banking. Okay, maybe I can show you here with the screen on, because you need to understand it carefully. I need to move this here. So now you can see, right? So what is the direct transfer? I'm the saver. I give money to a firm. They issue me security, a promising note, kind of a promising note, right? That's how I invest. Indirect. Indirect transfer, which means I need someone in between these two things. And that's are where the financial institution, the investment bank comes in. So here are the investment banks. They don't do anything. I give them money. They give the same money to the firms, and they get the security from the firms, and which they give me saver to the saver, which is me, right? And they can get their portion of uh, fee or portion of commission, a commission or fee for doing this. What do they do? Basically, they provide me analysis that which firm security I should buy. Which firm security I should, because I don't know anything. So I go to investment banks and I tell them that I have this much amount of money, but I don't have any knowledge about finance and financial security. So why don't you are knowledgeable. So why don't you help me? And I give you the commission on that. Or I can pay you your fee. So they will take your money, they will take your investment, and they will look. Then they have a team of financial expert like you, right? You're gonna join some kind of investment bank, most probably after finishing your graduation. So even if like you are looking for an internship, try to get an internship in the financial institution around you. It will definitely give you a practical insight. Right. So that's how investment banks help savers and firms to create money. Hopefully you can see me, right? Clearly. Hopefully. So that's how you do that. Now there is another option in within Indirect. So this indirect transfer is through the investment banks or firms. They only give opinion that which share you should buy, which stock you should invest. Then there is another indirect investment, and that's a bit different than this one. What do they do here? Okay, no worries. Because it is really important to understand, to make you understand. So that's why I'm using the whiteboard. If it would be normal, so I wouldn't be using the same thing. So now what's here in indirect transfer? One thing is very clear, that before, so first thing is direct, where me and the firm are face to face. The other thing is like investment bank. They give me the opinion and I do the investment. I give them investment and they buy the securities for me. Third one is I'm here. That's me. Here, These are the financial institutions, different financial institutions other than banks. Mostly brokerage firms. Now that's interesting. I don't know the business, the third party business firms, right? Who needs money. I don't know them. Neither do I want to know. What I need to know is about this financial institution. So I give them my money. They issue me their securities. They made a deal. Because they don't need money, but they are there to help out me. How? For example, I don't need a car. I ask you want to sell a car. You need money. You give me the money. Sorry, I give you the money. You give me your car because you wanted to buy another car. So you use that money and you give it to another person, and he gives you another car. So that's how you are getting the car as well, and you are giving me the car as well. So do you understand this example? Exactly the same thing. This works. So you, as a saver, give money to a financial institution, and that financial institution issues their own or its own security to you. You are done. You are done. You are dealing with the financial institution security. Your investment is done. What financial institution would do with your money, they will get into the business firm and they will buy the best security from there and earn the profit like a middleman. Do you understand? So that's how the money is being transferred through different channels. So three things: directly, you and the business firm. Second, financial investment banks. Third, financial institutions, right? Now, let's talk about monetary system. What is monetary system? For that, you need to know system. What exactly is the system? As you know, system, what is system? Can you tell me? Why do you call something as a system? We have a system in a country, right? What is exactly the system means? Can anybody tell me? System means order, right? Anything which is in order can be more efficient than the orderless things, right? So on my table, I'm not going to show you the picture of my table here. On my table, if things are randomly placed, it means it's not order. It will be difficult for me to get to one certain things, right? If this pen is on the table. But if everything is in order, I can easily find out that where I can save money. I can save time, sorry, not money. I can save time. So I can just read there and start to doing that. Otherwise, I will be just looking here and there and try to find out that how to make the things order. So as you know, monetary system deals with the issuing and transferring of money. You can also say circulating money. Issuing or creating money. Now, these are two different things. And issuing and creating are two different things, right? Remember that. And circulating or transfer money. What is the difference between issuing and creating? Issue means first time when the central bank it prints out the currency notes with their serial number. That's issuing. That's the issuance of currency paper. Creating means through investment activity, as I told you, you create further money. For example, from 1 million house, you get another extra million. That's creating the money. Right? So you need to understand that there is a difference between issuing and creating the money. So monetary system is responsible for these two main things. Why? Everyone need money, because why circulating or transfer? Because everybody needs money. So if the money is not being circulated, it cannot reach to some hands. So money should be circulating among all the hands of the population, right? So that exactly the monetary system is meant to work. Now, business require to invest in purchasing the individuals. Why do individuals require money? You require money to consume, right? So individual, you, any individual needs money to consume. Consume means to buy clothes, to eat food, to do certain kind of things, right? Whereas I can also invest money in education. So I can consume and I can invest. But what are my investment in education? Because anything, as I told you about the investment, anything which gives you the return is an investment, right? So education gives you the return after completing the degree. You will get the money based on that, whatever you have learned by paying the money. You can also invest in health. That can also give you the return, right? You can also invest in children, not necessary, but they can also give you the return in old age. But that's not promised, right? Maybe some do, maybe some don't, and nobody push them to do that. That's about the individual. That's why individual needs money. That's why the transfer of money is really important. Now, when we talk about the businesses, why do business why do business need money? Business requires money just to buy equipments, machinery, buildings or factory buildings or plants, right? Or inventories. So if I'm running a business, I'm not an individual, I'm a company, right? Small company. So I need a capital to start the business, right? First thing. So for that, I need to build a building where my office will be. I need to have a factory if I'm a manufacturer. I need to have some equipment, some machinery, some office equipment, all these things. These requires resources, and that is money. So business, individual, we understood. Now let's talk about the big fellow. And who is the big fellow who needs the most of the finances in your country? That's, or in any country, that's the government. Sometimes, as I told you, when the government is in deficit, is getting in deficit, it also requires money. And what do they do? How did what they do with that money? They can get money through taxes or something else, right? But they can get money from what do they do with that money? They build infrastructure for welfare of the society. Now, that infrastructure includes everything: roads, buildings, houses, hospitals, post offices, any government place which can help you, which can assist you, which can assist the citizens of the country. That's the assets of the government, and that's why government needs money. But all this can be done only if there are strong financial institutions, right? Remember one thing. So individual can sell the mortgage security to get money, right? You know that mortgage security. Individual. If I need money as a business, They get equity or debt security to get the money. What government does when they need the money? Can somebody quickly tell me what the government does quickly? What kind of things the government issue? What kind of security the government issue? Can you tell me? Come on, I'm waiting. Think about that. What the government issue to borrow money from public or from any other things? Perfect. What's your name? I can't read. Anyway, but that was good answer. Bonds, right? Those bonds can be long term and can be short term. So mostly it's like T-bills, T-bills in US and in many countries. T-bills is like for short term borrowing and long run investment bonds, right? They have different maturity level, depends on the. So in APM, like in arbitrage pricing theory or in capital asset pricing model, we will see that how much return we have to check out the net present value and everything. So now, which one in monetary system? Now you know that individual. What is monetary system is meant to issue transfer the money, right? Now only through institutions they can do that. They can borrow money. If there are no institution, no strong institutions, what kind of institution? Financial institution. Via so only because of the financial institutions they were be able to do that. So if there are no financial institutions, it's really hard for them to borrow money from savers. So here comes you. So do you know your importance, how important you are in the society? You are the one who gonna run these financial institutions. Just like blood is circulating in the body to make the body alive, similarly money needs in the economy, and you will probably a need of these financial institutions. So I really want you as my students to have a strong grip over these concepts. Mathematical problems is okay, but you should be really clear in concepts, because when if you are clear in concepts, then you can solve any problem by yourself or by using that concept, because that concept should be your knowledge, not the memory, because memory you forget, knowledge you never forgets. Once you have learned how to ride a bicycle, you still remember it, right? Even you will be old, if I give you a bicycle, you could have, you can ride the bicycle, right? Because you learned it, so you will never forget it. Even though you, for whole life, you didn't ride the bike, you still know how to ride a bike. But memories, you forget many memories, right? So always try to learn. And the best way to learn is to just clarify your concepts. Now, to run the financial institutions, what do we need? We need regulations. It's not like I just go out and I say, okay, I'm gonna start my financial institution. So all of you should give me the money, right? No, it's not like this. So there are certain regulations which are there, financial regulations, especially, more specifically, financial regulations, right? Because these institutions, mainly these institutions are banks. So there are different banks. What kind of different banks we will see now in next slide. So there are different there are also like international financial regulations. And there's also, you should know, because after like 9/11, due to different terrorist attacks, because the different world authorities, different countries in United Nations, they sat together and they said that, okay, if somebody is doing this kind of an act, they are in need of money. Without money, they cannot do that. As I told you, everything behind any problem is money. So from where they are getting this money? So we need to set up some regulations for each and every country so that every money transaction should be noted. And for that, they build like many international. One is they build many committees of from different countries. They are joining together. Then they launch a system of policies which every country should follow, not necessarily, but should follow, to build a good nexus of financial transactions. We will talk about this later on, maybe not. Or if you have personal questions regarding international regulations about the finance, you can reach me on Wednesday, because my office timing is on Wednesday on Ding until I will be there. So you can join me on Wednesday in evening, um, to discuss any other thing. So we're not talking about the financial international regulation right at the moment, but later on we will definitely talk about this, and we will study how the international transaction happens to be. At the moment, I'm looking for my black marker. Where is my black marker? See, I think my place is messy as well. So I couldn't find it. So I have to go for it with the blue one. Hope you can see properly. Now, who does that regulations? What comes in your mind? Who does that? Banks? Commercial banks? Government? Financial institution? Citizen? Parliamentarian? Or the people who are in the government? Policymakers? No, none. Central bank. Central bank of each and every country, they have only one or two duties. Like one is like to regulate, to bring the laws. How the finance work in the country. Though central bank is a part of government and policymakers, they are usually in the central bank to set this regulation, but we just name it the central bank. Chinese central bank name is People's Bank of China, I think, right? Not China, Bank of China. In US, it's known as Fed, or Federal Reserve Bank, right? In US. So what do? They can regulate who can create, number one, money, not the brokerage firm. Brokerage firm cannot create the money by itself, or financial firm. Who can? Only the depository institutions, who are allowed to take the deposit from the people. And remember, central bank doesn't take the deposit, isn't a depository institution. It doesn't take your money. Okay, it doesn't deal with your money. It deals with other things, which we will learn about this later on. So who deals with the depository institutions? Mainly commercial banks. For example, Bank of China, investment banks, and then every county has its own bank, right? Probably Chonjo also has a bank as a bank. So all the commercial banks in the country, they are the depository institution. Other than that, Investment banks are also depository institutions. They are the one who can take the savings and government loan association in US. You can also say saving banks. So all these banks, basically mainly banks, you can just deposit your money. Other than that, no one, according to the central bank, no one else can can take your money as a depositor. And they've opened your account in their banks. Uh, let's see how the central bank change the money. I need the marker. Where is my another marker? Okay, anyway. So what happened? Central bank is here in the middle. It defines the law, yeah, and also controls money supply. What is money supply? Issuing new currency. That's money supply. So that's one thing the central bank does. Another thing the central bank does is the financial to facilitate transfer. To facilitate transfer. Now remember one thing, central bank has some rules that it says that any bank, if I if I deposit my 100 RMB to Bank of China, then Bank of China keep 20% of my money by itself and give it to the central bank. Yeah. And 80% the Bank of China can invest outside and earn profit on that and give me a portion which is known as interest rate. If I go, and hence, like everybody, all of you also have to do this, go through the same process. So if I need money, I go. So at that point, the commercial bank is acquiring the 20% of each of our, so it can easily give it to me back. But if all of us suddenly go to the commercial bank is unable to return the money. Then central bank jumps in and then it helps that, okay, I can, because it's the same thing what the commercial bank does to us, the central bank does to the commercial bank. So all the commercial bank has to submit their some reserves to the central bank so that in case of any bank getting default, central bank can pay for that. Do you understand? And then from here, it goes to the world of commercial banks. So it's a banking system, right? So it can create money. As I told you, commercial bank will keep the 20%, 80% invest in the market through the, the market, financial market, right? So it create the money through that process, then it transfer money from one to another, from another to another bank. So that's how it creates further money. Then you can also say that it provide financial intermediation. As I told you, the financial investment banks, right? They give you the financial intermediation. They can help you to invest your money in a proper security, in a safe security with a low risk. And then we can also have its also duty is to clear checks. Yeah, or clear the transactions. For example, I send you the money, so it your account is in 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 some bank, in ICBC. Your account is in ICBC and my account is in Bank of China. So I need to pay you money. So I transfer you money, but that money won't come to you first. That money will, my bank will tell the central bank first. So central bank, in the central bank, every bank has their account, just like I have account in Bank of China. So each central bank, each commercial bank has an account in central bank. So when I transfer you the money, that money will go to the central bank, and central bank say, okay, so I central bank will take the money from Bank of China and transfer it to the ICBC bank, and then ICBC bank transfer that money to your account. So that's how the transaction takes place. So that's mean transfer and clearing. So clearing means now the transaction is clear. So after the transaction is cleared, then it will be transferred to you. So that's what do. So there is, always remember, there is one first bank, one national bank. The Bank of China is a kind of a national bank of China, right? So first bank give and take from the last bank, and last bank give and take to other banks. That's how they transfer, and other banks again to the first bank. So if my account is in first bank and I give it to the last bank is this one, your account is in this one, but I transfer through another bank's ATM. So that's how it circulates. And similarly, we deal with the Alipay and WeChat Pay, also use the same transaction, but with the technology integration. So here we stop this hour, and now we have 20 minutes break. Now remember that session will resume at 4:30. Okay, so then we continue. Okay, enjoy.